Welcome to Tradiers, the Trader's Edge. I am Jim Iuorio. That's Bobby Iaccino. Thank you guys so much for making this such a successful project for us. We really appreciate it. All the involvement we get from the listeners. You guys are the best. Also, please come join us at unfilteredinvestor.com, where we take a lot of the things we talk about on the Tradier Hub and turn them into, what did I say before, Bobby, that was funny? Like, I bastardized the word tradable into something else, but very granular, tradable, actionable shit. But anyway,
stuff.
Yeah. By the way, the reason Bobby is wearing a shirt for celebrating our team, the Bears, is because they are 4-0 in the last 4 games, 4-2 in the season. And by the way, last year they were 4-2 in the season and about to go 5-2 with 11 seconds left in a game, except for one pass from Jaden Daniels from 60 or 70 yards. Not only tanked the game for them, tanked the whole rest of the season.
I'm really hoping that our guest is not either, I almost said Redskins, a Commanders fan or a Detroit Lions fan. I'm not sure where he's coming to us from, but I will say this. Tell me if this worked. I got some multiple comments that both of us look crabby as hell in the last show. So now I've started to do something. I've started to find something like partially funny. And just before we go live, I play it on the side here on my other screen.
Yeah. So this was yesterday's show or the last Tradier
show? Yesterday's. People say
I think I was crabby yesterday.
We were stressed out about the technical difficulties.
Okay, that is exactly what it was. Right. As soon as we get technical
I hit the button of this funny channel that I have, and it was Britney Spears dancing around at like 50. And I just started laughing. And I want people to tell us if that looked like a real smile when you started the show. I think it did.
Good. Yes. Because we can't give crabby. That's not what people tune in for. And yesterday, for those who were watching yesterday, I apologize for crabby. Today, coffee, mixing a little cocoa, no sugar, but cocoa, because it's supposed to be anti-inflammatory. Do you believe that shit?
No, I don't.
Neither do I. And it tastes like hell too without any sugar. But anyway, markets. We covered that. Let's bring in our guest, John Kilduff, who is the editor of the Kilduff Report of Again Capital, a CNBC contributor, and on my Mount Rushmore of oil analysts. And Bobby, you're there too, along with Halima, Tracy, Bryn Kelly, the people who I know.
Take one or two off. There's only 4 people on Rushmore.
I can have my Mount Rushmore be whatever I want it to be. No.
Fair enough.
So, yeah, let's bring on John Kilduff. Okay, we can't be crabby today, John. We have to be upbeat and enthusiastic. First off, what kind of car is that you're in?
It's a Mercedes. It's an old one. It's a 2004 SL 500.
It's fantastic.
5-top convertible, Jimmy.
Nice. I love that. By the way, I'm going to say something. In all honesty, I love having you on our show. There's a couple of reasons, because I've noticed over the years that you and I occasionally look at policy things from an opposite angle. I love the fact that we do that, because I love when smart people give me a counterpoint, and I think that that's fun to do. And I hope there's an occasion where I've made you think about something the other way too, but thank you for that. Bobby?
Yeah, I want to ask you right off the bat, John, do you support a football team, and who is it?
Well, funny, I heard you guys on the intro there. I'll give you a laugh right now. I'm a Jets fan. God. Yeah. We've had the best quarterback over the years, how many times, and got us nowhere. So
Joe Namath,
come and give you a hug.
Oh, terrible. And we're going through the fantasy now of getting the first round #1 draft pick. I'm like, I don't want to hear it. Don't want to hear it. Been there, done that, got the losing record.
When we got rid of Justin Fields, pretty much everyone in Chicago thought he was going to be a pretty good quarterback. He was not bad here. So I was like, I didn't think we left you guys with the hot potato. So I'm sorry that that's working out that way.
Not to be sacrilegious or anything, we could have Jesus himself at quarterback. I don't think we would go anywhere.
The funniest video I saw this week.
When he runs to the right. What's that?
The funniest video I saw this week, one of those man on the street, amateur journalists running around outside of the stadium after the Jets game this weekend. He went up to a kid. This kid must have been 22 years old if he was. I mean, he was not any older than that. Kid had a Jets jersey on, and he says to the guy, "What do you think? What do you think of this game? What do you think of his team?" He goes, I hate this fucking team. I mean, I love them. I could never root for another team, but I hate them."
It's like a syndrome. There's something wrong with us.
Oh, don't even get us started. We're Cubs and Bears. So yeah.
I hear you.
Okay, so I've heard that markets are trading. There's lots of volatility. Let's start before we go deeper into oil. Let's talk about the GM earnings that blew estimates away. And Bobby and I, prior on the Tradier rundown, we were talking about how market sentiment gets such that when everybody agrees that the story is they're going to get crushed by tariffs, we pound the stock into pudding. And then everybody jumps on and thinks this is going to be the end. And then all of a sudden, the stories of their demise have been greatly exaggerated. Do you think that there's a takeaway from this?
That to me, Jimmy.
Yes, you, John. Sorry.
Yeah. Okay. Yeah. Yeah. Well, I mean, it's so true of these markets in terms of that the madness of crowds and all that sort of thing. But it's interesting. Talk about policy. Just how hammered the now the U.S. auto companies are getting for that lurch into the EV press, which nobody seems to really be any kind of embrace of. But they're turning that ship around, and the tariffs. Look, the conventional wisdom that it was going to be a wrecking ball on the economy, and that President Trump's claims that only that the consumers wouldn't be paying it appear to be bearing out, at least to a substantial degree. There's money coming into the Treasury. I mean, it's really remarkable that the whole tariff experience, I think, and these companies and what we did to ourselves over the decades. I mean, you guys are close to the same age as I am, and we watched it all walk out the door, right? The manufacturing being told that we couldn't compete on wages and things like that, and lo and behold, here we are in a vulnerable position. We found out during the pandemic, and hopefully never to happen again. So yeah, no, I think it's great. It's great that we're giving these putting some wind at the back of these national champions of ours.
So that is an excellent way to branch into something real quick before we get to oil, which is oil related because it's industrial, and that's the rare earth trade. Okay, we've talked about it on this show before, and we're going to have Luke Groman on. I think it's next week or something. But the rare earth, rare earths are not rare, but they are clumsy and dirty and environmentally a problem to mine. They're also very, very much needed if we want to have phones and technology and national defense and weaponry. So we pushed all that to China and the supply chain of those. China was like, we'll do it. And China actually then funded some environmental groups here, but that's neither here nor there. Maybe that's a conspiracy tinfoil hat wearing thing. The question I'm going to ask you, John, is it possible to reroute those supply chains, particularly as it relates to rare earth, in a short enough time that it doesn't take a hit on our lifestyle over the next 5 years?
Absolutely. And, it reminds me of fracking. When fracking first was reborn, about 10 or 15 years ago now, 20 years ago, there was all kinds of naysayers. There was no oil there, wouldn't last, the whole thing. And look at us now at 13.6 million barrels a day of production for oil, more than almost double the Saudis now at this point. Maybe that's an exaggeration, but
that's fracking awesome. Did you get that? That was a joke. That was fracking awesome. Sorry, go.
It is fracking awesome. And but Moore's law and these different things. I don't believe the naysayers. I mean, we haven't even begun to look for rare earths. And already, just over the past couple of months, there's been various companies who have emerged, have identified sites. It's the same thing. I mean, and the way technology keeps advancing, that was one of my biggest things back in the day, arguing against the peak oil theorists. I said there was hubris to think that we wouldn't have more advanced technology down the road. I didn't know what it would be or what it was. I thought maybe satellites, things like that would help guide us, but that it wouldn't be coming to the forefront. And sure enough, here we are. I expect the same thing with rare earths. And I also expect the same thing, by the way, for this whole data center electricity hunger that's on the horizon, they tell us, to also fall way short of what the predictions are. There will be efficiencies with the semiconductors and these processes that we can't even imagine right now. They'll be driven down so much that all of a sudden they'll be looking to put bowling alleys in data centers at some point.
Love it.
Guys, I don't know if you'll be able to hear this, and I do have a question for you related to markets, but this is the Jets kid that, Louise, if you could put the screen up.
You just see, I was born into this, I'm always a Jets fan, but I hate this thing.
Yeah, that sums it up right there. That sums it
That
up.
is just, to me, is so spectacular. It's like so the epitome of sports in a lot of cities. I'm sure the Cleveland Brown fans feel the same way. The Red Sox fans did, the Cubs fans did for a long, long time. Bears fans have been suffering since '85. We had a couple of good seasons, but still, that is the epitome of it. I hate this team. I was born into it. I'm not leaving, but I hate them. It's just unbelievable. Back to markets. I want to ask you about what you just said about electricity. There was somebody that said to me recently, or rather, I should say I read it. They didn't say it to me. I read somebody that said that the grid was actually built for quite a bit more electricity than it's currently handling. And this particular analyst said he thinks that based on the projections, there's about 40 years left of grid and plenty of runway to be able to build enough grid to handle what we're doing. Where do you fall on that? Do you think that sounds crazy, or you think that sounds probable?
No, I think that sounds absolutely right. And there's a lot of efficiencies. There's a lot of low hanging fruit as well when it comes to the grid. They only deregulated electricity trading and pricing. I'm going to say about 20, 25 years ago now. It had a high promise, and actually it's one of the most active markets out there. And if you look on the CME futures pages on the open interest for these various electricity contracts, the open interest is huge. It's a huge market. But the ability to wheel power, it's called, you generate it, say in California or down in Texas, and the ability to get it out to the rest of the country where it's needed. There's still a lot to be done there. But it's not hard work. It's just going to it'll take some money, obviously. But the grid is a lot better off than it's being advertised. And a lot of work has gone into it. And partly because of the, inadvertently, rolling out of smart meters, real-time pricing, things like that, have gotten these upgrades and this granularity to really demand points that are going to allow the grid to live on very well for some time. So I would totally agree with that assessment.
So John, about a year ago, I started accumulating in the nuclear space, because I thought, well, again, how I trade. Like I can think all I want about what the power needs are going to be or what they're not going to be. But what I prefer to do is think about what the other people think the power needs are going to be and what they're not going to be. So I loaded up on nuclear through two different names, and it's been a great trade. It's been faltering a little bit in the last couple of days. Do you think you can get too over your skis in nuclear? Or do you think that's still going to be the answer, the tradable answer?
I think it's definitely a good tradable answer because it's come back into favor. The ridiculous policy of throwing the baby out with the bathwater after 3 Mile Island and all that has finally been turned on its head. And now you hear talk about nuclear being a real alternative and supplement to the grid. Can keep in mind, what's important about nuclear is that it's usually baseload power. And by that, I mean, it's always on, always feeding the grid, always, getting paid for that production. So it's important. And I fully expect that to be part of this emerging panic over not having enough. I mean, to make it overbuilt down the road, Jim, but in the short term, with the sentiment and the embrace of it, absolutely, this is a time to be in it.
You think the No Kings protest worked? Did it work to get rid of the Kings? I'm sorry, that's not a question. Let's talk about crude oil.
Didn't get rid of Burger King. I can see the one open down the street here. So
there you go. There's a king. First of all, I want to thank Jonathan Barnett for that Jets kid. He put it in the chat here. Also got a couple of comments. Remo drives a Benz 2006 E350. Also has a 2008 C300. Those cars seem to last, huh, John? Seem to last.
They really do.
Remo, a Yankees fan? Are you kidding? It's like rooting for the plow over the tulip. You know what I mean? Come on, you're a Yankees fan, please.
I'm a Mets fan. Okay,
I was talking about Remo, our buddy.
I want to bear my psychosis, my psychotic, sports, profile. But there it is.
He's Jets, he's Mets, and he's a commodities guy. Like it's all about volatility for kill
right? How have I not been involuntarily committed yet?
Bobby, can I ask you a question, and then I want John to comment on it? So, okay, you look at because Luke Groman a couple of years ago said, you buy gold, you sell oil. And he came up with a really good thesis for it. Well, oil's been heading down for a long, long time. What are the three main reasons, whatever the hell it is, Bobby, that oil's in the dirt like this, and what changes that? Because I'm starting to look for longs.
Well, I don't know what changes next. To me, the spikes you always see in crude oil. I never like to use the word always, but the vast majority of the time when you see a spike in crude oil supply, it is a supply disruption. You rarely get grinds higher in crude oil. You get shocks that then grind higher, but you generally get grinding crude oil
Because there's no
movement.
huge spikes in demand. There's huge
Well,
cutoffs.
yeah, I mean, you can get you grind up in demand, and oftentimes there's been suppressed supply that comes in to fill that in due time. So, in terms of the up move for crude oil, I think it has to come from stronger global economy, and I don't see that anytime soon. And that's actually what I was going to ask John here, because when I look at the crude oil chart, we're up the last two sessions, but we're sitting at the lows we set around May, right? Let's call it between April and May of this year. And then we rallied off of, I don't even remember what, some sort of, I don't know if it was tariffs or Ukraine or a dead camel. I don't know what it was. Something happened where we rallied up. I don't even remember the events anymore. And then we popped a little bit higher, but the chart still looks awful to me.
To me too.
We're talking about very recently, there was rumors that OPEC was going to return to producing an extra 547,000 barrels a day, and they didn't commit to that, right? They may come up with that in a little while. The IEA says basically oversupplied. The EIA says oversupplied. OPEC says it's balanced. But John, we all agree that OPEC tends to lean their analysis towards stronger prices than we have today. So I don't have anything for that, Jim. I don't have any thesis as to why it would go higher, except that it's too low.
So,
and I don't even know that it's too low.
So, John, two questions. Why has it been a dog, and what's going to turn it around?
It's been a dog, really, as Bobby was mentioning. The demand side of the equation just hasn't been good, and the demand side of the equation really is China. And they really lost the thread just on their own in terms of domestic policy, industrial policy there. But they also are getting hammered by the tariffs and the shifting away from their their country as a place of production, again because of the tariffs and other pressures on them. So if we don't have that, you sort of lose out on the ability of crude oil to sort of get out of balance into a deficit situation. Also, too, I mean, look, the position of the United States is just unbelievable. I don't know a person who saw this coming, where we'd be at 13.6 million barrels a day of production. So that's the biggest thing. My biggest issue with this right now, in terms of could we get a rebound, is Brent hasn't broken down below $60 a barrel, so there's still hope for the bulls there. And also, too, when the sentiment gets this abject to one side or the other, I get a little nervous. I can certainly and I mean accepting of this glut theory that has now burst on the scene here for 2026. If the U.S. production holds up, if the Chinese can't get out of their way, and also I'll just talk in a second about how we got to be concerned about China. I think from what we're all starting to hear about senior military leadership changes, a potential threat to President Xi internally. If China were to go into any kind of political turmoil, look out below for oil because that will be very damaging to their economy and for the demand outlook. So that could make matters worse. But to the extent that it's lions laying down with lambs with President Trump and President Xi here when they have their meetings coming up soon here, things could stabilize. But there's just a lot of problems for this market. And, the Saudis just, have been dying to engineer a higher oil price. They weren't able to do it. The fantastic Saudi lollipop, that extra production cut that they gave the market for the past, year and a half now, did nothing. And if anything, they're losing market share. But that will be the other shoe to drop as well on the downside, guys, is that if the Saudis finally throw yet another tantrum, that will break the price to the downside as well. I got to keep reminding everyone that the negative prices that we saw in the beginning of the pandemic in 2020 was really kicked off by the Saudis going into a full out production mode to battle for market share. And every time they've done it 3 times at least. If you look back in history, they've always cratered the price by doing that, which is their ultimate weapon. Not holding off supply, oversupply, because they're the low-cost producer. That's the killer for the market.
Oh, that's a great takeaway, by the way. I didn't mean to jump in there, Bobby, but I love that takeaway. They can produce $8 a barrel and they're break even, right? But anyway, Bobby.
Yeah, and that was one of the things, as John just said, they've been struggling to get the price up, and then they went, F it, we need to go back after market share because they were losing market share. Now, Tim just put in a comment I think is relevant to this discussion. Obviously, it is. I just heard Besson say more sanctions will be put on Russia tomorrow. Do the oil traders care anymore? This is something I said when the first round of sanctions started, and I heard John say something similar somewhere else, but John, I can't remember where. Russia they have found buyers for their oil, and that oil displaces other oil. So oil is not perfectly fungible because there's different levels or types of oil, from light sweet to heavy to the black tar. And it's not perfectly fungible, but it is a commodity in such that when you remove it from one place and it gets filled by another place, it gets filled, right? Water finds its own level. It's that kind of a thing with crude oil. So it's not that the oil traders don't care. It's that it's not going to make a difference in any large way. That's point number one, for the oversupply. Number two, my view only, how many more sanctions do we have left? Why don't we put them all on? What are you waiting for? It's just like, we're going to do more sanctions. What are you going to do now? Restrict sourdough bread? I mean, what's left? It's bad shit to me. It's like more sanctions. Where are they getting them?
It's a head scratcher, but I will tell you that the market is relatively oversupplied, but we also, the market is sensitive to not losing that Russian supply. So we do care. Part of what you're seeing the past couple of days here, this bit of a rebound, has been this speculation from President Trump about India not buying Russian oil anymore, or trying to curtail it. I'll believe that when I see it. I don't,
Yeah, agreed.
God bless them. I don't blame them. They could strike a bargain for themselves, and they did it. They found a desperate seller. So good for them, because it worked out for all of us. And I think, look, the problem policymakers have, in Europe here, every oil consuming country, is that if you do cut off this Russian oil to a severe degree, you're looking at much higher oil prices, at least for a time, or potentially. And that is going to, sink the economies. We can't have expensive oil. It's just not in the cards, as we saw. It's definitely a predicate to inflationary impulses. I don't care what people say about, energy intensity of GDP and this and that. Look, that item you buy on Amazon is getting to your house on a truck that's running on diesel fuel for the most part. So
I have a question for you, John.
Just real quick, Jimmy, let me just throw this last thing in to John's point about how unbelievable the position of the U.S. is. We've been basically existing with rig counts between 420 and say 490 since about March of 2024. So over a year, rig counts have been basically flat. They dipped a little bit in May of this year, a little bit down to the low 400s, still 13 plus million barrels a day. And that goes to John's point about efficiencies develop, just like they will in electricity, that we don't see at this point.
But Bobby, are you saying that if we're not increasing rig count, we could be stretching existing wells and creating?
It used to be what we say. I'm not really saying that anymore because they're proving me wrong. There was a guy I knew at MIT that told me that they used to say all models are wrong, but some are useful. So I think that my model on this is now useful, but it's been wrong. That the decline in rig counts was going to show up in production, because it hasn't yet. Maybe it will.
So that was going to be what I asked John, is that, so with oil where it is now, there has to be a lack of incentive for U.S. producers to start and I know they've hit the gas quite a bit, but to hit it any further, is that an impediment to increasing production still, the fact that it's at $58 a barrel or whatever it is?
Well, now it's funny. Now we're in a price zone where it's getting to be sort of desperate times. So they're going to keep producing here at these levels because they need to generate the cash flow. Even though it's probably getting close to a break-even or maybe a slight loss position, if it goes much lower, they're still going to try to hang on, but then you'll certainly start to see production shut in. What's interesting about this idea or this situation with the rig count, we don't need as many rigs as we used to. The technologies that have been rolled out recently over the past couple of years, especially from Exxon and Chevron and the bigger guys who have taken over so much of the acreage now because of the past couple of oil price busts, is that they're using things like gel now to get the oil out of these crevices, as opposed to when they used to use water. The CEO of ExxonMobil talked about this in a couple of the earnings calls about this new technology they have to extend the life of these wells, potentially upwards of 5, 10, 15 more years with all that they can do with these new technologies. So again, that's my point about the conventional wisdom about the rig counts and all these setups are generally wrong. The models are generally wrong. The other big problem I see on the horizon too is all this excitement about liquefied natural gas. That's going to probably end up being in a glut position too. And I don't know what's going to be the landscape there when those prices don't go the way that all the PowerPoints are saying they're supposed to go.
I wouldn't buy natural gas with your money, only because I bought it several times and lost money on it. By the way, so we're a couple minutes, 10 minutes into this discussion on oil, and both of you, I thought somebody is going to bring up the potential refilling the SPR. One, if that was announced, would that Strategic Petroleum Reserve, for people who out there aren't oil traders, I know 90% of you guys know it, but just in case. But is that not a big issue? Two, is it not a concern because we know Trump doesn't want to boost the price of oil? He likes where it is. And two, now the fact that we are such a big producer, does it even matter that we have an SPR anymore? John, you go first on that, will you?
Yes, well, I think the president alluded to maybe buying 1 million barrels for the SPR just this week. It's a token.
Yeah, right.
But this is where I think I might get off the train a little bit. I totally support and advocate a robust Strategic Petroleum Reserve, not only to fill it, but to use it the way it was used by the Biden administration and other administrations. Also, there should be strategic refined product reserves. I say that because we're up against a cartel. Okay, we're up against OPEC and others who are in it for themselves, rightfully so. I don't begrudge them that, but they will withhold oil. And the Saudis are classic at this. When they do finally get that oil price up towards 90, 100, they sit on their hands. They blame people like me and you guys, speculators, driving the price up. There's no shortage. We're not. Don't look at us. We're not doing it. So, okay, you know what? We have a lever to pull then. And that's our SPR. And, it has a varying degree of success. I'm not saying it's a salve or anything, but I'm totally for it. And we should take advantage of these lower prices now and put some more oil in there. But to your point, Jim, would we now with our production have to worry about, not having enough oil to refine and supply ourselves with? The answer to that is pretty much no. Only because, as I know you guys are aware, that the fracking oil, for the most part, is very what we call light and sweet, and our refineries in the Gulf Coast aren't really built for that. But I'm waiting for once we invade Venezuela and maybe make that the 51st state, we'll have all the heavy sour crude we need for 10 lifetimes.
Well, won't that happen when we take over Canada too? Canada has a lot of oil. So we take over Canada, make mine Earths there. We could figure this out if we were the president's advisory staff, Bobby.
Absolutely. It would be, if we took over Canada and Venezuela, it would be Saudi Arabia. Who?
Exactly.
So I am also an advocate for refilling it. I'm not an advocate for using it how it was used. And I'll tell you why. I feel like it'd be more advantageous for the country to unleash the full power of being as energy independent as we can, rather than needing to have a reserve that could cover what? I mean, at its peak, it was at what? 750,000 barrels of oil. I'm sorry, 750 million barrels of oil.
Right.
750,000 would be funny.
Yeah.
We'd all be laughing at them. 750 million barrels of oil. What's that supply, John? 3 months? 2 months?
Oh, yeah. I mean, it's nothing. But look, keep in mind, they released 1 million barrels a day during that Biden release.
Understood.
And that helped. It helped. It kept the lid on. It kept the price, in my opinion, from being able to break out completely to the upside and get really terrible. I think it made something of a difference.
I'm just a pain and pleasure guy. In other words, if we hadn't have done that and the price would have broken out, we can't prove a negative. So probably would have, I agree with you. But had it not, we'd all be saying something different. My view is this. that should push people toward an actual decision on whether they want an electric car or not. Those kinds of things to me should take care of themselves. I totally understand what you're saying. I'm not against, alleviating human suffering everywhere we can, but I also kind of laugh at it sometimes when it's people I know, like Jimmy. So it's just one of those things. I think those things should work themselves out. Absolutely, we're against a cartel. So that's not, a balanced market as it is. We have other weapons against that cartel, specifically Saudi Arabia, that we never use. I'd rather see us not, wipe out the strategic. He didn't wipe it out. I don't want to be verbose here or hyperbolic. I'd rather not see us use the Strategic Petroleum Reserve unless like we're at war with OPEC. Just go to Saudi Arabia and be like, the fuck are you doing? We can do stuff to you too. And we will. I just feel there's other pressures we could put on them without using the word fuck as much as I do.
Quick time out here, boys. It is now time for our mid-show commercial. And you guys, by the way, you guys have, Luis, can you put the banner up? You guys have been so supportive of us. Appreciate it. I always hate to ask another favor of you, but it's really not a favor for us. It's kind of a favor to you. Please try Tradier Pro options trading platform for 3 months completely free. We talk to people who trade options for decades. We've talked to people who trade options experience for days. Both of them say the same thing about Tradier Pro, is that it's absolutely top notch. Just scan that code, try it for 3 months. It is absolutely free. Thank you for listening to my commercial. But you guys think, Bobby, you think I'm growing up as a pitchman? Do you think I could be that Billy May guy or whatever his name was and sell shit?
I really liked the way you said that one, where you're not really doing us a favor, you're doing yourselves a favor so that we can keep doing this show. Yeah. But back to real stuff.
Yeah. You were channeling your inner Peyton Manning, pitchman.
Exactly.
Look at that. He's one of the best out there. John, can I ask you a technical question about the SPR that you might know that I don't?
Sure.
Since about July 2023, it's increased about 50 million barrels. Is that technical, or is that something where there's actually an active?
What do you mean? Like, do they get paid interest on their oil?
No, I mean, just, they haven't been releasing as much, or it was pre-scheduled to get to this level, or is that them actually attempting to refill it again?
Over the years, certain of the budget agreements involved having a sale of the SPR to generate money, even though it was a token amount. So there was that. There was also too, over the years, you said going back to 2003, 23 or 3?
2023.
2023.
We built it up a little.
They topped it up a bit. Yeah, they took advantage of a price break. Look, I think certain of the policymakers, on both sides of the aisle, like the idea of it, like the sort of sense of security it gives. And yes, there were efforts to expand it and make it even bigger. I don't think there was an appreciation for the U.S. Oil production position then when that sort of came to light. So I think today, if they were to try to roll out an expansion of the SPR, I think it would be rightly pushed back on, given our level of production. But as far as it goes, on a technical basis, operating basis, it can handle this, 1 million barrels in or out, just a matter of turning the knob. So it does have that capacity. I know there was all kinds of questions about that at the time, but if you go on the EIA website, DOE, they have a ton of information about it, and it's all laid bare there. It was all, very built out in the open, and an important asset, in my opinion, for us.
So tell me this.
They were totally trying to expand it so that it's an even bigger cushion potentially.
Okay, so we've covered a lot of the fundamentals of oil, but I still don't know how to make money here. Am I selling oil or buying oil, Bobby? What am I doing with the names? If rates are going down, a lot of these big integrateds pay a dividend. Is that going to be a tailwind to any of the big integrateds' names? What do you think, Bobby?
Yeah, I like the dividends, the dividend payments. They're pretty healthy, but I have not had a crude oil trade. This is probably the first time in a long time that I can say this. Last crude oil trade I think I did was June or July of 2025. Just haven't looked at it. Crude oil as a commodities trader, it has a characteristic that a lot of other assets have, but is very pronounced in crude oil, is that it trades in these wide ranges. And I'm more of a short-term trend breakout guy. So if I'm not getting a short-term trend breakout, I'm not placing a trade. And it's been in this range. It's been in this range of, it's like a $10 range. you could trade in and out of that range, but I'm not good at that, so I don't do it.
John, what do you think? Where are we making money?
Yeah, as far as the price action has been horrendous, if you ask me, over the past number of months now.
Is he frozen up for you too, Bobby, or no?
I will say now that we finally. What's that?
You froze up for a sec. Keep going. Yeah.
Oh, I'm sorry. Can you hear me now?
Yeah, can you fine now?
Okay, great. Yeah, so I mean, so the big test for WTI was whether or not it could break 60, and obviously it did. I think you know, just from a technical base, I would expect some retracement as we're seeing here right now. So maybe a test back up towards 60. But if we get back towards 60 in that 59 to 61, 62, you got to be a seller again for this thing to test down towards the low 50s. 58 is proven to be some good support, but it should go to the low 50s. I think it'll ring the sort of we're over and done with this around 47, 48 before it's all said and done. Look for that to occur, in that late January, early February zone when we're coming out of winter. Wasn't a bad winter, kind of a setup, and we're in that refinery maintenance season before the summer driving season kicks in. I would buy.
Oh, good. As long as he's froze up, I got a question for you now, Bobby.
A buyer of what we call the crack spreads.
Oh, good. I was going to say to Bobby, is there an absolute low? And don't tell me it's -40 like it was back in 2020. Absent whatever weird shit we were experiencing in 2020, which I still think back of as bizarro world. Is there an absolute low where we even Donald Trump starts panicking about the level, worrying about our producers not making enough money and supports it?
I feel like those are two different questions.
Okay.
I think Trump starts worrying in the sort of $25, $30 range because there's producers now that make money in the $40 range. Not many of them, but some of them are there. And I honestly think Trump, if let's say Trump were king, I think he would continually just augment their profits. Just, what's the word?
He just gives them money like he's doing to cattle producers
just
now,
give
right?
them money to keep, because the thing that people don't understand about Trump, love him or hate him. You remember in Bronx Tale when they asked Sonny if he'd rather be hated, loved, or feared, and he said he'd rather be feared. Trump would rather be loved.
Yep.
And if he thinks that people are loving him because gas is at $25 and he's giving stipends to support the industry that isn't going to produce with oil at $25, he'd figure it out if he could.
Oh, there's no
question. I don't think he starts worrying. He starts worrying when the company starts shutting down, our production drops, and he doesn't have leverage over Saudi Arabia.
And John,
I don't see that scenario happening.
I don't know if it'll surprise you or not, but Bobby and I have been very, very critical of Trump's corporatist policies in several different ways. We think that, we try to vote out socialists anywhere we can, vote out corporatists, and then we get one in who can be one, but to a lesser degree, I think. Does that kind of stuff drive you bonkers too? When he drives the price down and then he's going to support things. I mean, he's doing it in cattle, which 77 cattle ranchers are going out of business like every week or something ridiculous like that. And he wants to buy Argentinian. And then he's like, oh, no, it's fine. I'll give cattle ranchers money. Where do you fall on all this shit?
I mean, it doesn't resemble what I thought was sort of conservative economic policy, but I don't want to call anybody out, but hey, look, I'm all for helping everybody. So you want to help the cattle farmers? I'm fine with that. And it's an interesting idea about supporting the oil industry if prices were to go low for a time to weather the storm and give them some of the tariff money. The guy who just advocated for the SPR can't really be against that either, I guess.
I can be against it all, Bobby.
You can. All right, I can.
Yeah.
What's the word I'm looking for? I got to ask Tim's question. I still can't remember the word I'm looking for. What is it when companies get money to support their bad businesses? Why can't I think of that word right now?
I don't know. Yeah. I'll think of it.
Subsidies.
You'll think of it when
Subsidies.
Yeah,
right.
Subsidizing.
I got a question from Tim here.
I wasn't sure which one you were going for there, Bobby.
Shit policy. Anyway.
Widge just threw in cronyism, which is
cronyism. Thank you, Widge. Yeah.
Tim says, does John have thoughts on the dollar? It seems like the U.S. is still the cleanest shirt in the laundry basket.
John?
Oh, absolutely. This whole debasement of the currency, those concerns, you can see it's already rebounding. Our economy is stellar. the tariff money may, in fact, even help the budget situation. It turns out another concern that's being laid to waste potentially, to my own surprise. So yes, I think you're going to see dollar rally here significantly, as a matter of fact, and also that is another weight on dollar-denominated commodities. It's not a great correlation, in my opinion, but that'll also help keep a lid on crude oil prices going up.
So here's what, can I answer that question too, Robert?
Yeah.
Because I think we will see a dollar rally, like you said too, but I don't think it has a much of a connection with dollar-denominated commodities, because the dollar index is how we generally measure it. 70% of the dollar index, I think it's even higher than that, is measured against the euro and the yen. Two places that are both going through the same tomfoolery that we are regarding adding stimulus, deficit spending, drunken sailor spending. So I don't know that I can foresee a future where the dollar's rallying, goes back up to 104, which I'm not necessarily saying that because I don't have the chart right in front of me, and gold and silver still, which, by the way, gold and silver have given back last week's gain, by the way. So everybody who's panicking that trade is over, I think we're a little premature to call it. I think we've been saying that the last 2 months of it were speculative and not fundamental drivers that happened before. When something goes parabolic speculative up, it can do it down. But I believe there could exist a spot where the dollar rallies and gold and silver rally along with it. Do you think I'm an idiot, John?
No, I totally agree. Because I think gold and silver are finally getting a second look as a Bitcoin or alternative currency. Me too.
I like
moment.
that. I like that. That's a great way to put it too, Bobby.
John, where do you fall in the Bitcoin conversation? I don't think we've ever asked you that.
No, you haven't. I think I'm a little too old for it. I don't know. I've come around to it. Look, again, we talk about sentiment and what's everybody into. If everybody's going to say this is a thing, it's a thing. It's like art, I guess. Is a Rembrandt worth 20 million? I guess other people are telling me that it is, so I'm going to go with that. There is this scarcity sort of thesis around Bitcoin. The way you make it and the demand for it now that all the various central banks are wanting to get into it. So it's a sort of a new gold. And I think you got to be open to it. That's one of the things about being sort of an older person now in the market. I try to be open to new ideas, new ways of looking at things. And to me, Bitcoin is one of those things. So yeah, I think it has a place. It's earned its spot in the portfolio. And I think it's going to serve a purpose as we get more and more down the road here.
I just want to throw in real quick, Jonathan Barrett helped me with the word subsidy by describing it, saying the word for helping lousy businesses for love or votes is baksheesh. I don't know what that word is.
I like it though.
I love it. So here's my only problem with Bitcoin, and it's a big one. I actually did a podcast last week with these Bitcoin purists. I don't want to call them maximalists because they're not, but they're purists, right? And I kept saying to them that, I actually know a specific person who had their entire life destroyed in the Pacific Palisades fire, right? And the only thing that was salvaged was gold that they had in their house. It was melted, but it was intact, right? Because it's impervious. And, I said to him, I go, you don't know what bad can happen to the Bitcoin network. And he goes, well, the best mathematicians and computer scientists and hackers have all tried to create problems for it. They've actually been hired by a team of Bitcoin supporters to try and find it, and they couldn't find anything. So clearly it's impervious. I'm like, but you don't know what's coming. Like, technology. If you would have said to somebody, there's going to be something better than the horse and carriage, they would have said, well, we've tested everything out there and there's nothing better. He goes, yeah, but it's math. And there's no way to break this. And I'm like, just the fact that you're saying that makes me not want Bitcoin. Now I'm telling you, I don't know what's going to crack the network, if anything ever is, but they're telling me that this person, Satoshi, created something that can never be hacked or broken or corrupted ever, forever.
Bobby, I feel the rant coming on. Will you allow it?
Yeah, go.
Okay, people, this is an easy thing to balance out. Okay, Bitcoin is obviously spreading its roots, and the more it spreads its roots, the more difficult it is to uproot. If you have 50% of your net worth in Bitcoin, I think you're a freaking idiot. If you don't have any exposure to it at all, I think you're wrong. I don't think you're an idiot. But the fact that you think you can pick the winner, whether it's going to be the dollar, gold, Bitcoin, when you don't have to, unless you're a greedy person who wants to have all the world's money, why not just balance it out and live to fight another day? Bears can make money, bulls can make money, pigs get slaughtered. I wanted to have 3% of my investable in Bitcoin. That grew to 6%, relatively comfortable with it, but I stopped buying at that point in time. John, it's a simple solution, right?
I agree with that. I mean, it's there. It's a new asset. It's in full embrace, not only by the investing public, but global central banks. Wall Street, mainline firms. There's ETFs now, the whole thing. So it's like I said, it's come on the scene. Bobby, to your point though, one of the two things I've always been concerned about it though, if you don't have electricity, you could have a problem getting your Bitcoin. And I don't know what an electric magnetic pulse would do to it. Did they test for that?
I don't know. I honestly don't know. I actually brought up the electricity thing.
It's got some vulnerabilities, if you ask me, along those lines. But we'll see.
Yeah, it's like, look, I need to stress that these guys were not like that. Like, they didn't say that you should only be in Bitcoin, but they did believe you should have a very large investment in Bitcoin, and they all do. And they have a mining operation, which I got to see, which was just, servers, no big deal. They made a lot of noise. And the interesting thing about it to me was I asked the question about the electricity, and they said, well, if there's no electricity and the grid is down, first of all, no one can take your Bitcoin. They're still yours. As a matter of fact, they absolutely can't be stolen if there's no electricity. I'm like, okay, you got a point there. And then they said, but, I don't think people will want gold then either. They'll want food and shelter and water. And I'm thinking, yeah, that's true. But there was time before electricity where everybody still wanted gold. And I'm not quite sure why they wanted it then either, but they did, So, I mean, I'm just kind of looking at evidence and trying to figure out which way I want to go with this for the next 20 years of my life if I get that far.
John, comments on that?
Well, I mean, people will take payment in gold for stuff. I don't know how do you monetize your Bitcoin if the electricity's out?
Yeah, that's the other thing I told them. I said, without you guys are still tied to the dollar. There's not a universal, location where everything is priced in Bitcoin. So your Bitcoin is only as valuable as the dollars it converts to. So you're backed by the dollar, the thing that you ate.
By the way, didn't one of the fast food chains just come up with a Bitcoin payment system?
Steak and Shake does it. I don't know if there's a new one.
So maybe I want to know if you guys so let's say I give you guys 1/100,000th of a Bitcoin, or let's say 1/10 of a Bitcoin. Is that a taxable event for me?
For you?
For who? For anybody? I don't know.
It is for us.
Yeah. If it's more than $10,000, yeah, it's a gift. Yeah.
So I'm if I have let's say I have 200 grand of Bitcoin, then I give you 10 grand. Technically I didn't sell my Bitcoin, so it's not. I don't have a capital gains on that. You now have the Bitcoin.
Yeah, no, you don't. If you paid us for a service, that counts as you having cashed out the Bitcoin, and it's then taxable.
Interesting. By the way,
but
anyone
if you
else
gave it to us as a gift,
it's like giving somebody stock. If you give somebody stock, it gets the current market value, and that's what it's your new cost basis. It's just all technical tax stuff. But if a person gives somebody a gift over $10,000, the person giving the gift has to pay taxes on it.
The gift tax, right? Okay, that's interesting.
So here's another funny thing: Florida, the state of Florida. You can put up Widge's comment, Luis, if you don't mind, because I think John just echoed what Widge just said there at the bottom. You're cashing out an asset; it's taxed. And I think that's what John just said.
Coinbase will have a record of that.
Coinbase transfer. But if you had a cold wallet and you transferred it to somebody else's cold wallet, it's the honor system.
Right.
Oh, I love the honor system, but I don't believe in this honor system because I think Satoshi may have been the CIA and he may have worked for Google. But anyway.
Well, Florida just made transactions.
Investment grade diamonds or something.
Exact diamonds and gold.
There you go. Okay. Florida just made transactions in gold and silver exempt from sales tax.
DeSantis, man, He's trying to win everything, isn't he?
He's the best.
He wants all the gold and silver.
And
No
Timmy
real-
will know something about
He's
this.
trying to eliminate property taxes, apparently.
Yeah,
He's
he's got a proposal right now to eliminate property taxes below a certain income level of the owner of the home. And he says that's the first step to eliminating them completely. And Tim lives in Florida, who's been putting up a bunch of comments. I watched a press conference from DeSantis today. I'm not sure I got all of it, but from what I understood, Progressive is the first company to do it. They're issuing rebates to all the people in Florida who use Progressive car insurance because they are now refining the tort laws in Florida because Florida has 8% of the auto accidents in the country, 8% of the insurance claims when you combine housing and auto. I'm sorry, I said that wrong, but they have 78% of the litigation against insurance companies. So the insurance companies are now saying, look, help us with this and we'll help you with that. And they've got something set up where they're revising tort law so that you can't necessarily sue insurance companies so easily. And the insurance companies are dropping rates and giving rebates to people who live in Florida.
Wow.
Funny how that works.
Yeah.
Yeah.
When you have the
I think you
same
should drive that beautiful convertible down here and look for a place, John.
Totally.
That's what I'm thinking.
Totally.
I just finalized my 3 weeks in Florida today. So I have to now. I was planning on spending the winters in Florida, but then I took a job coaching high school girls basketball, John. So I got to wait till the season's over before I go, which interferes with all my plans. I'm bummed by that. John, tell them where the people can find you, will you?
Again, capital.com, killduffreport.com. I'll be happy to talk to you.
That's awesome. You are always such a good guest. I really think you're a wealth of knowledge. Thank you so much. Bobby, do you got any closing statements or can I play us out?
Nothing else. Just want to thank John for coming on again. Love talking to this guy.
Love it.
My pleasure, guys. And you guys are both great follows on the various social media platforms,
Hey.
X and all that. I enjoy the hell out of your commentary all the time.
Every time someone
Thanks.
says that about me, I'm like, I know I've pissed you off at least once. I piss myself off.
Yeah.
Just so you know, I
Fucking
live.
Jimmy, man.
Anyway, thank you for coming on. Thank you to you guys, by the way, too, who are watching this. You guys are the best. All the input we get is unbelievable. Jonathan Barnett was there, boom, with that video. We needed it. You guys are the best. Thank you to Tradier for hosting us here. And please check us out at unfilteredinvestor.com. Bobby and I and Mike Arnold. Mike Arnold's technicals are almost, it's like voodoo. They're scary good. Someone talked about his up to 54 in silver and then done with that move. Someone sent me a note the other day going, holy shit, how does he know these things? I don't know. But anyway, it's like voodoo. But thank you guys for joining us. This has been Tradiers, the Trader's Edge. I'm Jim Iuorio. That's Bobby Iaccino. That's John Kilduff.
You know how the financial world goes. Here comes the buzzkill. Please make sure to take some time to read this boring disclaimer. We will owe you one.